So hello everyone from your host ABJ, man. It's the Quant Data Q&A. Wednesdays and Sundays we run these for you guys, 5 p.m. PST, 8 p.m. EST. If you guys ask questions, sometimes we have some classes. I didn't prepare anything today in terms of classes, just really wanted to give you some time to ask some questions. But not only that, we do have a special guest, Mr. Jacob. Going to be showing some new features here in Quant Data shortly. But today I wanted to kind of recap the Friday because I know that a lot of you guys messaged me asking about the double down, right? Why did we double down at 69.20 SPX? Why did we have that conviction? For those guys that missed that on stream, well, it was a really good trade, first of all. That double down made us a lot of money. But I just wanted to show you why we did that double down. Let's show you in this one here, actually. It looks a little bit cleaner. I'm going to bring you back to the morning. And I'm going to bring you guys to the chart as well. You guys can kind of see what it is we were kind of expecting. Okay, so let's give this one. Give me 1 second here. Yep, perfect. All right. So we all ready? We all ready to learn? This won't take me that long because I think the double down was just very easy. And I think in the future, when you guys see this again, it's probably going to help you a lot. So we talk a lot about levels and we talk a lot about the overall sentiment of the market. So first question we want to ask ourselves at the market open, right? Scenario risk structure, right? What's the scenario for price based on what we're seeing? Scenario for price is that it looks bullish. That's the first idea that I have here. Does anyone else see something different? Probably not, right? You take a look at the deltas first and foremost, right? If we were to look at that in terms of joining an army, right? Green or red army, which side of the army are we looking to join, right? It should be green army first, right? So longs. So the idea for the scenario is that price is probably going to be positive today, probably going to be bullish. Our first initial levels are going to be yesterday's closing price, today's opening price. Let me bring up the chart here. You guys can see for yourself. Right, so we'll just drop those levels right now. So just those two first that we're talking about. So that's open price. And then we have previous day closing, which also provides us with this a little bit of a gap, right? Right off the bat, we know the opening MVC for Gamma. What was it? What do we think it was? 75s, right? 69.75s. That's what we can see right here. I know that we also had an inkling of 7,000 and then that's the 90s. But this was like the closest MVC that we have. It's just by a little bit over, like a couple 100,000. Okay. What else are we marking on our chart? What else do we be marking? What do we think? What are some of the levels that we want to talk about when we're looking at the market? It's going to be gamma 0, right? So we're going to drop these really quickly first, right? So gamma 0 actually lines up with that gap entirely. So it is really close, but we'll still draw it anyway. So 69.20 is that mark. Right, it is a bit of it's more so than, we give it like a $5 range, right? But that's kind of where it is, 69.20. You can kind of see exactly where price starts to stop. And this, we have a wick here, so if you wanted to include that, but without it, that's where we're stopping, right? So what did we say in the first open? If you were participating in that live stream, we said that, okay, we're looking at price. We think the price of the market should gravitate upwards, right? But if we do close this gap, which gets us into gamma 0, that's going to be a point where we'll look to get more risk on, so double down on our position. What did we sell? Right, 68.80, 68.75. and then eventually rolling it up all the way to the 6,900 mark. But that's how we ran through the day, right? We sold puts at the open, and then as soon as we came down to gamma zero, which I'll show you, we got there at around like 10ish, right? Let's take a look at the market. Right in the first 30 minutes, we got to it at like the 10ish mark. What changed so far? Right? Is that 10:07? There we go. So that's your 10:07 mark. That's right there at the bottom. What do we see? Right. So what we see is there is a slight shift in delta and gamma. We got right to the point in between where bullish and bearish gamma begins. That's gamma zero. But pairing it with how we opened in terms of the cumulative amount of delta, pairing it with right now what the delta looks like, does this still look bullish to you? Does it still look like there's more positive delta in comparison to negative delta? I would say yes. And so that fit all the parameters for us to double down on our position, right? The odds are that the delta still remains intact. If you even look at the 6900s, it didn't lose too much more. It did dip under a billion, but there's still a lot more long deltas here for them to have to give up, for them to have to sell off in order for us to actually flip red. If we did think the market was going to turn around entirely right at this point, we would have seen some of this gamma at 69.25, 69.30 flip red as well. And then more so the deltas. The delta is always going to be the base, right? This is the primary Greek that we want to look at. We would have seen more red for us to believe that, okay, we're actually not going to come back from this turnaround. We're actually turning around for the market here. All the longs have sold off. Still a lot of healthy longs at 68.50. But what do we know? Looking at this view, we know that prices come down, but there's still a lot of longs here, and we know that price is going to, or market makers are going to want price to close above these strikes in order for them to remain profitable. So yeah, that's kind of why we doubled down, and that was actually the bulk of the trade. We didn't do any more after that. I know when we came up back above open price, we sold into the 6900s, and we just let everything close. And so the progress for the 50K account challenge is we're at 3,679 now. So we're we're way over halfway, and we should pass this by like Monday. We should pass this by like Wednesday, in my opinion. So that's going to be just over 7 days of trading to pass a 50K. That's not too bad, in my opinion. But slow and steady, that's kind of what I wanted to showcase to you guys on this account. Now, again, I don't know if I'm going to get to the sim funded stage with this because I already have a live account, but maybe they just add this balance to the live account. But if we do get to that sim funded, I think it'll be really cool to showcase how we can run that through. Same thing, right? So last week we made $3,600. That's not too bad. That's not a bad payday. And yeah, slow and steady. That's generally how I like to go about all of the trading. And hopefully you guys understand it too, right? I've seen too many of you guys rinse evals, just full porting them for whatever reason. It's not something I want to promote here in quant data. I want to talk about taking confident, probabilistic trades only. So question here, how do you explain Delta has long red on 6950? When I saw that, I thought it was resistance level. Yes, it is. It looks like a resistance level, right? But take it in a cumulative level and then remember how we opened, right? So how did we open? Cappuccino. That's for you over there. We opened bullish, right? We opened with a lot more green than red. Do we think that the market's going to flip on a dime just like that because they've decided to change their mind? Was there any catalysts to change their mind? I think not. I didn't believe so. Now, I've tested the Gamma Zero pivot in these scenarios enough. And I did make a post on Twitter that you guys are welcome to read over. So someone asked the same thing. How do you know that we wouldn't slide down to 6,900 when we were at zero gamma? Gamma MVC is positive side. So I said delta, right? I always talk about delta, gamma, and Vanna. Delta is always going to be your first Greek that we want to look at. So delta told us that we remain positive on the day, right? As soon as we got to this area here, this area here, it's still more positive than negative. We're in a delta bullish zone, right? So where are we trading in this area? We're trading in this area. We're trading in a bullish area. There's still more longs than there are shorts. And then the opening night calculations, right? If we go back to the open, right? What does the open look like? This is what the open looks like, right? More longs than shorts. Continue onwards. And a flip would be unlikely. Everything in the end is probabilities, right? We could be wrong. But we know with a gap on Fridays, the odds of filling them are 78%, right? Shout out to OJ Futures for sharing that. Gamma 0 is there. The probability of reversal back to open price, 75%. Furthermore, the probability of us closing above open price, with both of these data points being met, a gap close and a gamma 0 being met, is more than a coin flip, 65%. So this is kind of the data we like to run on, and that's again giving me the confidence to double down on things. So transaction, is there regarding imperial trading, is there a spread? Open a bearish call on price, remain negative all the time. I would have to look at that trade order, but then again, you should probably talk to their support team. No, I don't really do that with them. But yeah, that's it. That's kind of all I had. I don't really have much to go over because we just wanted to take on for next week. So recap the last Friday, so we can further trade next week with more confidence. I know a lot of news is coming out next week. We got the tariff thing going on, right? Is next week also OPEX? Yes, 1, 2, 3. Yes, it is. So that should be a fun time. How do you handle if there's a sudden reversal and do breaches on your credits, or how do you manage the losses there? And when buying credit spreads, do you take limit or market orders? I always set limits. I don't like setting market orders for spreads. Even if I have to set a limit at like something silly, like I would still do a limit than a market. I've had issues and situations where I've done markets and then I fill for something. Like, let's say the spread is like 50 cents and I'll fill at a market for 15. And that's just because someone actually in the market existed with a 15 order for a buy. And you never want to get caught in that. I think when you just long options, it's a lot easier to market. But when you do a spread, I've learned that the hard way. And someone else actually warned me about this before. Even with the liquidity of SPX, there are some situations where you can fill for something really disastrous. So what I do after I filled for 15 cents, I was stuck. I'd have to hold it till the end of the day in order for it to make me any money, or actually just get out of it. See premiums keep flapping, especially in your pivot points. Yeah, that's why you don't do market orders. Yeah, because that flip-flopping of bids and asks, like you could fill for like the worst thing ever. It's happened before. So this is Monday's data. I know someone's asking right now. This is what Monday looks like. It still looks like, we should be inching forward, up in price. I know futures right now is down, but that doesn't mean that this can't bring us back up, man. I know everyone's eyeballing that 7,000 SPX. Personal opinion, personal belief, I think we hit 7,000 sometime, and then we come running right back down. I actually think this Thursday should be a pretty bad Thursday. I still have this on my outlooks. Like I think this is going to be met maybe this OPEX week. Just my personal opinion though. We'll see. We'll see where we go. Maybe even, there's a lot to go through. One catalyst is all it needs. One catalyst, and then we're going to come right back down. So I don't want to take up too much time because I want to give some time to Jacob. Jacob is here to show some page level filters. So I'm going to go ahead and cut this recording for YouTube. So for those guys watching YouTube, you guys want to watch us trade live every New York session, make some money, make some confident trades. Come on in. Our live streams are free. That's it for YouTube. I'm going to cut it right now.